Hi there, Miranda Alt here with Keller Williams Success Real Estate and the Miranda Alt team with your Monday market update for Monday, April 29th, 2024. We're at the end of April. We're almost in May. School is coming to a close, and that means everyone is rushing out to buy a house before the end of the school year. This is a huge time for the real estate industry. The last 2 weeks of April is kind of everyone's last ditch effort to get a home under contract. We've got two different types of buyers out there. People who are finally like, shoot, it's spring, summer's coming, we got to get a house. If we're going to get in a house before the beginning of the next school year, we've got to get something going right now because they want to close by August. We've got the other set of people who want to close right at the end of the school year. So we kind of have both people in the market right now, people who want to move over the summer and people who want to move at the beginning of the summer. So the end of April tends to be a really, really busy time of year in the real estate industry. And boy, oh boy, are we seeing it. We had 155 new listings hit the market in Montgomery County in the last 7 days. We had 154 go under contract. We had 90 closed sales. 42 42 price changes, 57 on the private market, and 0 expireds. Now, this week and last week, we had more new listings than we had for the every other week since the start of this year. So we are definitely seeing more and more homes hitting the market every single week. So those of you who are out there, who are buyers, who are feeling frustrated with what's happening in the market, if you are ready to go, if you get all your ducks in a line, you've met with a realtor to sell your house, you've met with a lender so you know exactly what you can afford, you've got a pre-approval, you've got everything ready to go, then you are going to be ready when the right house hits the market. And I can assure you, the right house will hit the market. So you just have to be, get all those things lined up first. And if you need help with that, of course, give me a call. In 2023, just to kind of give you some perspective, in 2023 this week, we had only 135 new listings and 155 under contract. So we are in a good place in terms of more new listings, more to choose from, homes going under contract. But there is still, of course, the affordability issue. Everyone is talking about the interest rates. The interest rates are higher. Last week, we had a big rate hike on Wednesday and Thursday, settled down a little bit on Friday, and then today it's back up. So ever since April 9th, interest rates have been about 3/8 of a point higher than they were prior to that. But they've been hovering around the same, right around 7. They're now over 7. And of course, all of the rates are always going to be determined by your debt to income ratio, your credit score, all of those things. So a couple things going on this week. We do have the Fed's meeting this week. Jerome Powell will be doing a press conference on Wednesday. The Feds are not going to be discussing cutting the rates at all right now, but they do have a plan to cut the Fed rate 25 basis points at some point this year. Now, why have interest rates continued to go up and why April 9th? What happened? Well, basically, we're still getting really strong economic data. Inflation is not going down. We need inflation to come down in order for the Feds to be encouraged to lower interest rates at all. So we're not seeing that yet. We're seeing that inflation is still at about 3.6, 3.7%. They wanted it 2. We see that we're getting strong jobs reports, strong manufacturing reports, strong GDP, CPI, all of these things are still really good. And as I've explained before, we don't have a strong economy and low interest rates. Those two things do not go hand in hand. So when our economy is doing very well, we typically have higher interest rates. That's how that works. The mortgage-backed securities, the bonds, those are an investment. And when the stock market is doing really well, investors are going to put their money in the stock market rather than putting it in bonds, which are a more conservative investment. So let's talk a little bit more about that. There is some discussion in the Fed minutes from the last meeting that the Feds could start buying up treasuries again, which would help ease interest rates later in the year. So there is some indication that we will have a little bit of relief in interest rates as the year progresses, but there is no guarantee on that. We're really holding out for 2025. And again, inflation is going to have to come down in order for that to happen. Thursday, we already talked about that. Homeowners are cash cows right now. We have got over 1/3 of homes selling in multiple offer situations nationwide. So we are still seeing multiple offers. We're seeing homes selling for more than they're listed for. Homeowners are sitting on so much equity right now, which is really the only thing that's keeping our market moving. Because, if I'm a seller and I outgrew my house 3 years ago, and yeah, I might be locked in at a low interest rate, but boy, oh boy, I got 4 kids and they're doing nothing but getting bigger every year. And it's finally time to rip off the Band-Aid and cash in on all the money that I've made on this house and finally go buy that bigger house. And the amount of money that I'm making on my house is worth it to leave the interest rate. So we are seeing enough people that are willing to do that, because the fact of the matter is that the reasons that people move is not interest rates. They move because of marriages, divorces, babies, deaths, job transfers. Those are the reasons why people move, and those things happen whether the interest rates are high or low. So we're still going to have some people in the market, but yes, we are going to have far less transactions this year. Now, hopefully we will have home builders building consistently throughout the next few years, so that we will start to get some sort of headway in the discrepancy between home formations and the number of shovels in the ground, the number of homes being built. So that's what we need to get this kind of, back on track to where we're seeing a more equal and fair balanced market, where we've got 4 to 6 months inventory, and it's in either a buyer's market or a seller's market. We are still very much so in a seller's market at this point in time. We're seeing homes even that have been on the market for 10 days, then all of a sudden get multiple offers. That does happen. So we're still seeing that. Some headlines that I saw today when I was doing my research: New York Post had a headline that said, Florida sellers slashing home prices as inventory surges to uncomfortable levels. That is very specific to Florida. You have to realize, again, that real estate is hyper-local. So if you're reading these headlines and thinking, oh, prices are coming down, you have to look at the specific area that they're talking about. So Florida, yes. I've also heard Arizona prices are coming down. Part of the reason Florida prices are coming down is because home insurance has gotten so expensive. Builders have continued to build. So some people have left Florida realizing that it's just too expensive to live there. In this particular article that I read by the New York Post, it was talking about one particular homeowner whose home insurance last year was $8,000 a year, and this year it's $14,000 a year. That's largely due to the hurricanes. Also, the HOAs have gotten very out of control down there, again, due to hurricane insurance. So that's what's happening in Florida. In Arizona, I know prices are coming down because the builders have been building very rapidly. They don't have to worry about winter, so they can keep building all year long, and they just have gotten more inventory. So when you have more inventory, well, then prices tend to come down. It's a supply and demand. Here in Illinois, especially in McHenry County, we still have extremely low supply. We still only have less than 1 month's supply in McHenry County, pretty much for the whole county. So you've got to realize that prices are not going to come down when we have very low supply. We have high demand, low supply, prices are going to continue to go up. And we foresee that happening for the rest of this year. So if you're someone who's saying, I'm going to wait till prices come down, I'm going to wait for interest rates to come down, get in line, you along with everybody else. And then when interest rates do come down at the end of the year, I have a feeling prices are going to spike. And if you're waiting for prices to come down, I don't know when that would ever happen. Perhaps in 5 to 10 years. I don't know. That's not coming from any source of data. I just don't see how that's going to happen when we don't have enough supply. So anyway, so I'm Miranda Alt with Keller Williams Success Real Estate and the Miranda Alt team. Thank you so much for watching. If you have any questions, if you need any help navigating this housing market, I know it's tough and I know it's confusing and there's a lot of moving parts and it's hard, especially if you've got to sell your house and you want to buy another. I'm helping people do this every single day. I have many, many home buyers right now who are both buyers and sellers, and we are navigating this market. I have one closing tomorrow. They're very excited. They've got the dream house. They outgrew their house many years ago, and they're so happy to have more room starting tomorrow. And then we're going to close on their sale in a couple of weeks. We're doing this every single day. So if you're worried about it and you're thinking that it's really hard, please call me. I love helping people through this, okay? Again, Miranda Alt, thanks so much for watching. I'm at 815-529-0777. If you need any help, I'm here. Have a great day. Bye.